Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today, we have Joyce. He's the managing director on Nasdaq Market Intelligence Desk to take a look at today's action and also a little bit longer term on the charts. Brian, it's great to have you with me as always. And you know what? Another choppy session for stocks overall.
Yeah, we've definitely seen some outperformers and some laggards today, just as we have during this entire decline and the bounce higher. Off the lows, we are seeing a bit of some strength recently from the regional banks and the energy names, which were the two of the worst performers on the way down. Particularly in the last week or so, we're seeing energy up about 12%. The energy sector, we're seeing financials up not a lot, less than 2% of the last 5 days, but it has been outperforming other groups like tech and communications, which previously had been the outperformer. And so as a result, this week the NDX is performing. It's up about 0.5% of the last. Well, today it's up 0.5% of the last 5 days. The NDX is down about 0.5%, the only index in the red. And I think it's just, it can't be outperforming all day, every day. So, but the deep oversold groups like energy and financials seen a bit more of a relief rally this week. That's contributing to the NDX underperforming its peers.
All right, let's take a look at our first two charts today, Brian. Run us through the daily and then what you're seeing on the longer term weekly chart.
Yeah, so on the daily chart, we went out. Well, you and I last spoke last Friday, and that was when the NDX actually made its high. And we highlighted then kind of what we're going to highlight here now, because I think it's important. And there's a cluster of resistance right here in this range between 8,700 and let's say 8,600 and 8,900. And the 89.13 level was a pivot low back in mid-January. And then when we had our first relief rally on the decline in late February, it peaked at 89.13, give or take a few points. So what was prior support turned into resistance, and we're now coming back to that level again ever since we bottomed down around 67, 6,800. So that is your first level of technical resistance. Right in that range also is the break-even line year to date. So potentially you could see some people maybe locking in some gains now that the NDX is back to break even. And then finally, just at the bottom end of that range is the 61.8% Fibonacci retracement coming in around 86.05, which is the retracement line from the entire decline from February down into March, which was about a 30% decline. So we hit that technical resistance that we thought could cause some problems last Friday, and it's causing the index to consolidate and what I would call in a sideways range. We haven't had that dramatic of a pullback, and as you can see with those two rising blue trend lines, those parallel lines, the rising price channel is still intact, so nothing too bearish as of yet, simply looking at this daily period chart. The weekly period chart, which we can go to now, is a little bit more interesting. And Jill, you remember back in late February, we spoke on the 20th, which was a Thursday, which was when the NDX was a day removed from making 52-week highs. And we were highlighting then that there were some potential reasons to be cautious, the NDX, partially because it had such a strong, dramatic move to the upside from the October lows, just a virtual straight wall higher. But then we were also looking at the price action. And the reason I bring this up is because we're seeing similar price action right now. And specifically what I'm referring to is the candlestick pattern. And so on the weekly period, we could see back at the high, that red candlestick, the body of the candlestick, which is the thick part of the candlestick, which represents the open and closed range. It takes place within the body of the prior week's candlestick. That's referred to as a Harami price pattern, a 2-week candlestick pattern or a 2-period pattern in this case weekly, where this week's price range is open close range, I should say, is within the prior week's body. That can also be a signal that the trend is topping out and it's about to reverse. And that is what happened back in February. And we're seeing the same thing this week. We're seeing this week's range, which is a pretty narrow range, take place well within last week's range, which was a large green candlestick higher. Now, we know we've had a phenomenal move off the March lows, and here we are about 4 weeks later. And to me, it looks like we could have a potential topping pattern here. The other thing I would note is that, as I just said, the open close range for this week is very narrow, and that's what we call a doji pattern. So not only is there a 2-week bearish Haramai pattern, but this week's candlestick is thus far forming a doji pattern. So we'll see where this closes by the end of the day tomorrow. But if it can hold around these levels, those are two technical reasons why I would be cautious the NDX and really the broader market here at these levels. The daily RSI is up around 60, which in a bear market is usually where you would expect for it to top out. So yeah, again, these are just risk levels, and anything is possible going forward. Doesn't necessarily have to mean that we're going to see negative or bearish price action in the days ahead. But I think the weight of the evidence is increasing to, at the very least, let's say a period of time ahead where we can expect some consolidating price action.
All right, let's take a look at our next chart here quickly, just at a relative basis with NDX performance.
Yeah, and so relative strength is key when you're trying to find the winners and losers, and PMs are looking to see which sectors they want to be weighted towards, or which benchmarks they want to have a high weighting in. They will look at a relative strength chart, and you can see the NDX over the S&P. This ratio, has been a straight line higher, a parabolic move in late February into most of March, and we peaked back on March 23rd, March 24th. That is when the broader market on an absolute basis bottomed. And I think the reason the relative strength from here topped out is because what is rebounding stronger from the lows tends to be those sectors and those stocks that have been most oversold. And so we would expect to see some sort of outperformance by the laggards over a short period of time, which is what we're looking at now. So we came close to retesting that high just a couple of weeks ago, and we pulled back a little bit from there. But what we're looking at here is essentially near 19-year highs. Yes, the Nasdaq-100 has been far outperforming the SPX for some time, and it's reaching levels not seen since 2000, 2001. So still a strong outperformer, still a market leader, and this is just showing some necessary, I think, consolidation after what looked like, or what appears to be a straight line higher.
Mm-hmm. All right, let's move along here and talk about how individual company performance impacts the index, because we hear all the time, the largest 4 or 5 companies are the ones that are really moving it. But what you're showing us here suggests that might not be the case.
Yeah, I mean, certainly, the big large cap names are having an impact on price, and some of them like Amazon and Microsoft, which are some of the biggest caps in the index, are having some of the strongest price performance. And so, that is certainly contributing to the upside move. But there are also some big cap names that are weighing on the NDX as well. So it's not, in my opinion, fair to say, the entire performance of the NDX is being driven by just a couple of names to the upside, because, while it is a market cap weighted index and most U.S. indices are, we could see that, some of the big cap names like Apple, Facebook, Comcast, Marriott, Booking, very, very big large cap names, they're actually, weighing the most on the index. And this is looking at the performance year to date 2020 up until this afternoon. So yeah, there's some big cap names that are driving the index higher, but there are also some names that are very large cap names such as Apple and Facebook, some of the biggest out there, that are also weighing on the stocks. These are still good stocks. They're strong. Their long-term performance is still very, very strong, and the technicals look relatively good. But in the short period of time that we're seeing in 2020, there are some big cap names that are actually weighing on the index as well.
All right, Brian. Great stuff as always. Thanks so much for joining us.
All right, thank you, Jill. Thanks for having me.
All right. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.